Hello, dear traders. On the first day of December, stocks traded mixed but closed lower. The Nasdaq was the only index to gain in little on Thursday. Stock markets in Australia and Japan edged down during the Asian session today. Likewise, US stock futures are trading lower ahead of important US employment data. Investors are now awaiting the release of labor market data in the United States, while markets are trying to predict how aggressive the Fed's next move will be. The incoming macro statistics look somewhat confusing. This personal spending in the United States rose in October, while manufacturing business activity slowed down. Mixed results instilled fear of a possible recession in the United States. Today, all eyes are on the non-farm payrolls for November, as these figures will reveal how rate hikes have influenced employment and determine how assets will move further. By the way, markets may price the November non-farm payrolls report differently, as has already happened to the Fed chair's comments. Jerome Powell hinted at the possibility of a reduction in rate hikes in December, and this will allow the US Central Bank to evaluate the impact of tightening on the American economy and the jobs market. Still, markets mostly priced his dovish comments, paying little attention to his hawkish warnings. Non-farm payrolls for November will be the last monthly report ahead of the upcoming FOMC meeting on December 13 and 14. Therefore, the situation may change depending on the results. Rosy statistics will give the Fed carte blanche to act more aggressively. However, figures coming in line with the forecast, markets will see it as a signal for a reduction in the pace of rate increases. Meanwhile, in a case of disappointing results, recession risk concerns will mount. With the sentiment widening on market recently, a decrease in the price index to 6% from a 6.3 came in handy. Indeed, statistics on the US instill optimism in investors and signal that the peak of interest rates might be just around the corner. In this light, the forex market saw outflows of cash from the US dollar. A breakout through the market of 105 yesterday marked the end of the pre-launched 380-day soaring of a DXY above the 200-day moving average. The greenback fell against the basket of major currencies after Powell's comments. Indeed, its counterparts now have similar conditions in terms of rate hikes and growth prospects. Therefore, the US dollar index is trading at 104.40 during the Asian session. It's moving near 104.56, the lowest level since mid-August, and its price range of 104 and 104.90 keeps narrowing ahead of the key US employment data for November. Today, the greenback shows the lowest exchange rate against the Japanese yen. Early this week, the pair faced strong selling pressure in the area of 140, and the fall gained momentum. As a result, the quote went below the level of 135 on Friday. During the Asian session, the dollar-yen pair remains bearish, trading at 133.90 near the support level of 134. The next support level is seen at around 132.5. In the case of an uptrend, the pair may encounter resistance at 137.50 and 137.80. Then growth may continue to another resistance level of 140. Alternatively, the greenback may strengthen today by the close of the North American session. During the Asian session, USD JPY is trading in the range of 133.60 and 135.60. The Aussie dollar has been bullish in recent days, showing the best performance in 11 days on hopes for the easing of stringent restrictions in China and the Fed's dovish pivot. During the Asian session, the AUD-USD pair keeps moving up in the price corridor over 0.6794 and 0.6838. Early on Friday, the Aussie dollar was seen trading at 0.6822. An increase in risk sentiment as well as a rise in oil prices for the first time since early November instilled optimism in the AUD buyers. In effect, the demand for the Australian currency remained beyond, even amid disappointing retail sales results and the expectations of the Reserve Bank of Australia's interest rate decision next week. In the light of a slowdown in inflation to 6.9% in October, the regulator is likely to raise interest rates by 25 basis points again. Against this backdrop, the Aussie dollar should have depreciated. Yet the situation is entirely opposite. This once again confirms that external factors have a greater influence on Australia's national currency. As you can see, it's possible to yield profit even when assets show mixed trading. The main thing here is to stay informed and use the relevant info to your benefit. InstaForex will keep you up to date with the latest events in the market. Stay tuned with us. Until next time.